So, tell me a little bit more about, one thing that I saw that struck me was there's been a non-interest income at banks that dropped sharply in 2022, and specifically mortgage business income that fell off a cliff. I suppose that's not to be catching anybody by surprise when we see interest rates so high, but can banks recoup that disruption through higher interest income as rates keep going up?
So the interest income for the banks has been made this year, 2023.
Mm-hmm.
And if you look at analyst models moving into next year, you're going to have stable to down net interest income. So the answer to that question is no. So the question though is, can mortgage come back? Can capital markets come back? Can merger advisory come back? Because those are the big swings, if you will, in the fee income that you talked about. It's a great question. Looking at the data a little more, mortgage fees for some of these banks were down 40% in 2022 over 2021.
Mm-hmm.
And, they're just starting to stabilize in 2023. I would argue that you had a wide gain on sales during, so call that price, and then volume of mortgages was very high in 2022. So I don't think we'll ever get back to the same level of mortgage fees that we saw in 2022. I mean, just a case in point, refi was down in January of this year, 80%. It's now bottoming at down 40 this July. So we're forming a bottom. The year-over-year comps are getting a little bit better. Refi is not coming back anytime soon with a mortgage rate of 7.4 versus there's a huge cohort at 3.5.
Yep.
So there's like the percent people in the asset-backed world look at percent of mortgages that are, refinanceable. It's very small relative to historical terms. Purchase is still, people want to buy homes. Purchase was down 50% in January year over year. I'm looking at the MBA indices, and we're now down 30 in July. So again, we're forming a bottom on purchase. So that's where your optimism will come. Optimism should come from in mortgage. But there's been a lot of headcount reductions. Managements are trying to rationalize to a lower origination volume environment and fees. I think gain on sale fees will probably be a little bit less.
Okay.
And just in terms of capital markets, total investment banking fee pool is probably down 40% in 2022. 2021 we had tremendous activity in PE and M&A and SPACs, and it just drove so much profitability for these firms and peak iBanking revenues relative to prior years. And it's a cyclical business, but 2022 is just a really special year. So, 21 was a very special year. So ECM was down 70% in 2022, equity capital markets.
Mm-hmm.
And then merger advisory down, call it 22, and debt capital markets down 40 roughly. So money was really in motion in 21. And now we're seeing managers prune staff, underperforming companies and venture capital, and just underperforming employees. So debt restructurings are starting to pick up. So some of the more bankruptcy sensitive firms like a Lazard or a PJT are seeing the pipeline build for that, so that's usually not a good leading indicator for future M&A and capital markets. But it is a cyclical business. It's highly profitable. It's got great ROEs. It will come back, maybe just not to the peak levels that we saw.